Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for May 12th, 2013. Happy Mother's Day to all your mothers out there. And before we get going, I'd like to remind you that the presentation is for educational purposes only. We are not financial advisors, nor are we broker-dealers, and we're not making any specific trade recommendations. Also, any trades or results covered in the presentation may or may not be from live trades. In the event they're computer simulated, we do the best we can to be sure they're completely accurate. However, there are times when simulated trades differ from live trades, so be aware of that. And also, the risk of loss in trading options is substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on YouTube, come on over and visit our trading blog and check us out, what we have. Also, be sure to check out the Rock M3 and Bearish Butterfly video series, and those can be found at bearishbutterfly.com and m3options.com. Also, while you're there, take a look at the options tribe. They have a lot of neat things going on. All right, let's take a look at the markets. As of last week, we had this nice bullish breakout here, and we were saying it was all systems go for the bulls, and we were bullish, bullish, bullish. Well, that's what we got in the SPX last week. We got a continuation of this up move, which was no surprise whatsoever. At this point, we are a bit overextended. We may go a little bit higher. The extremes would be probably, for now, about 1640. We get much higher than that. We're at a very high risk of at least a moderate reversal for a couple of days. But as of right now, we continue to be bullish. Since we are so overextended, the markets are going to need to consolidate a little bit. I'm still holding my 1660 price target here, but not till after some sort of a consolidation going on. It is possible it might grind up, but we shall see. We are still bullish overall. If we switch out to the NASDAQ, not only did we get the breakout on Friday, we got a nice big gap up here, and this thing just continued to go for pretty much the whole week. So this as well is overextended and continues to be bullish. We're due to some sort of a consolidation. I'm still holding my price target of 30.30 here, which is another 50 points, but not until we consolidate for a little bit. It's going to need to digest some of these moves. And the Dow, same thing here, the continued bullishness. We're just holding this trend line, which is fairly aggressive to the upside, and due for consolidation. This one here may not consolidate. I wouldn't be surprised if we creep up on the trend line. And let's go back to the Russell. Still holding a 1,000 price target for the Russell after some consolidation. This, from a percentage standpoint, was the biggest mover last week and the best performer, and not a surprise because it was relatively weak and now it's relatively strong, and the Russell tends to do that. It gets weak compared to everybody, then strong, and that's why it's a little more volatile than most of the other indices. Especially with this nice big up move on Friday here, we've been having some really big price movements, which just gives you a little bit of trouble with market neutral trades. And just like everything else, this is due for consolidation, so I wouldn't be surprised to see it, back down a little bit, or at least slow down into this coming week, which would be nice because it is expiration week, and big moves during this week can be quite painful, as we found out last month. Let's take a look at our positions. I'd like to start with the V Condors and work our way to the rock trade. So as far as the V Condor, the May V Condor, there was nothing urgent that we had to do to this position, but what I did do is if you look at our T log here, on Monday, I came in at end of day, and we're just going to sell this 1,910 put, and all that's going to do is raise our expiration graph a little bit so we can get a little bit more money in this. Like I said, I wanted to get that expiration line up so we can pull 3,000 out of this month. By Monday, end of day, it looked fairly obvious that the market was going to hold its gap or hold its break of resistance. So I went ahead and sold that because I wasn't concerned about the market coming down at that point. And even if it does, it would have to come down quite a bit, even without this put, to really hurt us. So it's really kind of a no-brainer there. And when we look at Friday, I ended up just taking this call, which was at 980, and rolling it up to 990. And the reason for that, again, is to bump some more money into our expiration graph. If you look at where we are now, we're at about a $3,000 gain, which is what I'd like to get out of it. And let's see, the expiration line is at 31.71. As long as we don't get too harsh of an up move here, which I'm not expecting. Like I said, I'm expecting an up move, but not a terribly harsh one. Then we should be able to expire this with a $3,000 profit, which is looking nice. The June condor, or June V condor, I should say, is not doing quite as well. We put this on right at the bottom of the run, and we had a very aggressive 75-point up run. This position would very, very rarely have any kind of trouble to the upside, and we've actually had to do a roll up on Monday. So if we come back to Monday, and I'll just come back to earlier in the day, we're sitting here Monday at 3 o'clock. And our position looks something like this. I have my short strikes on the call side up here at 990. I have 12 of them. I have my long call down here at 890 and my long puts at 1020. I'm running into a delta problem, and I have a choice of buying back some more of these 900 calls. And when we get to the point where we're starting to have this delta theta problem, should I buy them back? In other words, if I buy one of these back, I have a 1-to-1 delta theta. I might be okay with that. I mean, that's not that bad. But the reality is it's to the point where I'd almost like to roll this thing, especially with the bullishness of the market and the fact we had this breakout and we're likely to go higher. I might as well get it over with now and just roll the darn thing. So when I roll these, what I'm going to do is I'm going to roll back from 990 to 1010. And I'm going to sell as many of these, and then of course I'm going to roll my 1020s back to 1040, and I'm going to sell as many of these as I can and still have my delta under minus 100. And I'm also going to take my straddle here and roll it from 890 up higher. On the put side, I'm going to take my 800s and I'm going to roll those 40 points. So I'm going to go from 800 to 840. And I'm going to do the same thing with the longs, and then I'm going to take my straddle and roll it higher, basically into the middle of the position. So if we pop ahead a half an hour and take a look at where we end up with 14, 10-10 short, 15, 10-40 longs. We end up with our straddle from 890 all the way up to 930. And on the put side, we end up being short the 850s and long the 820s. And we have our long put at 930. Now, one of the things I did here is I left my put spread on at 800, 770. And the reason I left it there is because I wasn't paying attention and I completely forgot about it. I didn't even realize it was there till the end of the week. So this actually ended up remaining on the position, ended up not being a problem because the market didn't come back down. Normally I would have definitely taken this off, but I did not. So we go another day to the 7th, and the market continues up another $6, and we started having a delta issue again. If we go back a half an hour, right, where we're pushing at minus 100 delta. So what I ended up doing is buying back 2 of these 10-10 calls, and you can see that if we pop forward. And I believe that's all that happened to this, and this is where we sit as of today. Like I said, when these, since I've had them on, when these go down to almost nothing, we'll just pull these off here and take our risk off the table. And this is what the position currently looks like. Of course, we're able to capitalize, but like I said, that's only because I forgot to take it off. And here where we are. So as we stand now, if the market slows down, that would be good. Theta should bring us back to a reasonable level here. This trade could go either way. If we get a really, really hard down move, we may have a problem to the downside, although we still have a decent amount of room. If the market just stops here, that would be fine. If we get a really, really hard shot up from here, we may end up max lossing out on the upside, which is not till like 5 grand, so that wouldn't be till almost 1,000, and we'd have to have an aggressive move to 1,000 in order for that to happen. If we just kind of creep up, we should be able to hold our losses under $2,500, as long as nothing like that happens. And that's what the position looks like. So like I said, I still think this will work out fine. It's just one of the tougher months for one of this because it was such an aggressive move. Let's take a look at the June bearish butterfly. Okay, this trade here as of last Monday was sitting in a 930 position, 930 butterflies. we did have delta theta ratio issues. It was definitely time to roll it up. By Tuesday, we finally decided the market was definitely probably going to hold here. Went ahead and rolled this 930 to 950. Take a look at the day after that. You can see the price move, and we're now up at 950. And I held this position until Friday, where we added the 970 butterflies in here. And now we're sitting with the position at 950, 970, 2/3 scaled in. We have another add-in point at 990. We're probably going to need to make a delta theta rule should we exceed 980. As it sits right now, the position's down about 1/3 or a little bit less than 1/3 of our maximum loss levels. It's to be expected. It's called a bearish butterfly for a reason. It's entered bearishly position, and we've had nothing but up moves from here. So this is what the position looks like on an analyzed graph. As of right now, this trade's doing perfectly fine. It's good news the market's overextended. Should we just have any sort of a minor retracement, this thing will be break even very, very quickly. So no concerns with this one here. If we take a look at our May bearish butterfly, that's a different story. Back when we were at our support level, I rolled this back on paper because I wanted to make things interesting. I really didn't want to make things this interesting, but we ended up with what we ended up with. And if we take a look at this on Monday in the morning, we're down about $7,500, and our position looks like this. As the market went up, if we go towards the end of the day, I end up having to buy three more 980 butterflies, and we looked like this. So now we're in a total of 10 940s, 10 960s, and 8 980s. Down almost to between half and a little more than half of our maximum loss number, which, like I said, isn't bad for what we've gone through. Remember, we rolled back to at the money here, and we've had a 60-point plus move on a negative delta trade. So again, this is to be expected, and we're near expiration, so that doesn't help us any either. If we go back to Monday morning, you'll see our position looks like this. We're down about half of our maximum loss number. We're in 940, 960, and some 980 butterflies, to a total of 4. If we go to the end of the day here, we've added another 3 of these 980 butterflies to bring us down to our minus 250 delta coming into overnight. And the following day, the market continued up, and by the end of the day, we had bought our last 3 980 butterflies, and then we sold out of 4 of our 940 butterflies for a position to look like this. And at this point, we're down almost 2/3 of our maximum loss number because we're just continuing to get these aggressive moves in a low volatility environment near expiration. So that's tough on the trades. If we go to Wednesday, by the end of the day, we sold 2 more of the 940s. And now we're down to only 4 of these 940 butterflies. We're still down around $9,000, which is almost 2/3 our maximum loss number. Coming into the overnight, this is over our delta. It's because we got a shot up right at the end of the day and didn't catch it. So earlier in the day, the delta was in range. That's why we cut it all the way down to 250 near the end of the day, because we don't know what's going to happen in the last half hour in the overnight, and you can't really be trading. A lot of times in the last half hour, you can get yourself in trouble or into a jam. All right, so we kept this position until Friday, and on Friday, we ended up selling the remainder of the 940s, and by the end of the day, we'd also got to the point where our delta was too high in the 960, 980 position. One of the things you notice is there's really no time, when we're looking at buying a 1,000 butterfly, there's not a whole lot of time premium in this 1,000 call anymore because we're so close to expiration and the volatility is so low. So instead of buying the butterfly, I start out buying verticals, and I'm going to buy a 950, which is the long strike at which my regular butterfly would be, and then I'm going to sell a call with a reasonable amount of time value, and $1.80 is not bad, so I sold 2 of those. In the event we keep going up, then I'll roll this 990 to 1,000 when there's some time value there, and then we'll add the whole butterfly in. We'll just start adding whole butterflies in here, and we'll start selling off this time value to bring up our expiration graph. But as for right now, we're pushing half a maximum loss. This is our delta into the weekend. If we get a flat market next week, this will probably come back. If we get a lot of price movement, it's going to be toast. So, we'll just do the best we can. We'll hang in there until the end of the week, and if the market goes in our favor, then we may end up breaking even, maybe making a little bit of money. And of course, if we get a really harsh movement, we probably end up max lossing out. So that is a bearish butterfly for May. Next, I'd like to take a look at our June M3 trade, which has been pretty mellow this month. As of right now, the profit and loss is actually a little bit off on this. I haven't corrected the prices. It's more like $600 or $700 up, which again is still relatively flat. What this got this week is on Monday we bought 5 900 910. We sold 5 900 910 put verticals, and if we go back to Monday. At 10 o'clock in the morning, we had long 10-840s, short 10-890s, short 5-900s, short 5-910s, and long 10-930s with one long 850 call. Everything's looking fine here, but at the end of the day, we got a continued up move, and I bought 5 of these 900 puts and sold 5 910 puts. And if we come to the end of the day, we can see where we're now at short 10 910s. The market continued up, and on Thursday we were getting way ahead on this butterfly, and we're positive Vega, and the theta is very low. At this point, I'm in a bullish trade. If the market really wants to stop for a while, or they drop the volatility out of this put, I'm in a lot of danger here of this line collapsing on me. If the market continues to scream up as it did, this is really no problem, because obviously we get up into here and this will make money. So I always have the choice of staying where I am. I could have actually added some verticals in here. There's a lot of things I could have done. I actually did decide to roll up. And I did that because I think we're going to settle for a little bit, and I'm hoping that's this week. And if we settle back this week, then this will look fine. So what I did here is, the first thing I did is I rolled up 10 of these 840s to 870, and I did that to bring capital into the trade, because this month I'm trading a $50,000 trade with like $37,000. So I need to keep my capital levels down. So I'm doing this control capital technique. So I went ahead and I rolled this, and I brought my capital level down to around $6,000 in the trade. And then I bought some broken wing butterflies to roll these shorts up to, I think, some to 930 and some to 940, and to roll these longs out to 970. So by the end of the day, we are in 10 long 870s, 10 short 910s, 8 short 940s, 2 short 950s, and 10 long 970s. We still have the call on the same location. We have our capital level still under our 37,000, and the position looks like this. So we got our Vega and Theta back online. The market settles in here or stops going up, it's fine. If it continues to go up, it's still fine. Not a big deal here. This is very good against price movement protection. Of course, we get a 35-point move down. It's going to be painful, but those don't happen very often, luckily. And as of Friday evening, this is the position we sit in. If the market continues to go up, we can start rolling these verticals out again. So we'll just continue to do what we've been doing. If it's and we can decide whether just let the price go again, or if we want to continue to vertical this out, and then we'll go from there. I may end up closing this position, or at least mentally closing this position, because I want to be out of it. 35 days expiration, which is going to be towards the end of the week, early next week. And if the market, whatever the market happens to give us for a profit, I might mentally take that and then decide if I want to, and call that a May trade, and then decide if I want to go ahead and stay in it and trade June close to expiration, or if I want to just roll it out to July and trade it into the July from there. I'll make that decision when the time comes, but I may do either one. Right now, I'm kind of liking the close to expiration trade because we're so overextended. Boy, the chances aren't too good we're going to get much over 1,000. This position will handle 1,000 like nothing, so I am kind of liking this position, and I hate to get out of it with the odds looking the way they look. And that is the June M3. If we transition over to our rock trade, this trade has been doing fairly well. Usually it's up more money than this by now. However, like I said, the market just hasn't stopped going up. If you come back to Monday on this trade, and I made a lot of adjustments first thing in the morning this week, and it's just because we've kept having these really big gaps. So if we come to Tuesday, first thing in the morning, which is first adjustment day, and we'll look at 9:30 because that was before we did anything. At this point, we are short 10 920 butterflies. I'm sorry, we're long 10 920 butterflies. We're long 10 960 butterflies and 9 980 butterflies. Our position looks like this. And of course, the market on Tuesday just continued to rise here. And by the end of Tuesday, we sold off 4 of these 920 butterflies. So if we go to the end of the day, we're down to 7 920. Sorry, I guess we sold off 3 of the 920 butterflies, and we're down to 7 920 butterflies, and we have our 10 960s, and we're up to 10 980s at this point, and our graph looks like this. As we go into Wednesday, we continue to sell off these 920 butterflies, and now I'm down to 3 of them by the end of the day. And we're still in all our 980s and 960s. Our position looks like this. We come into Thursday, and we had a bit of a down move, so we didn't really need any changes. And coming into Friday, I sold off the last of my 920s by the end of the day, and then I bought, because we needed further adjustments, I bought 4 950, 980 verticals. And the reason I bought verticals instead of buying the 1,000 call butterflies, which is what the initial guidelines tell us, is I didn't want to buy the butterflies with only 55 cents of short time premium. So what I did to correct my delta, again, this is just the biggest thing is we get our delta corrected. What I did is I added 4 950s, sold 4 980s because they still had $5 a time premium in them. I'd be happy going to the 990s for $1.80. I typically don't want to go to 50 cents. So this is the position we ended up in. As of the end of the day, we're up almost 10% on this. We're going for 20, and I'm still going for 20. We'll see what happens. Big price move. We start getting big price moves, I may just pull out of this at whatever profit we happen to get. If we get any kind of luck here and the market does settle out, which it's definitely due to do so, only going to take a couple of days. We'll be up near $10,000, and I will probably keep this on and probably won't expire it, but I'll probably keep it on until expiration day, and see how much we can make. We may be able to do more than 10,000 and make up a little bit for the small 8% gain we had last month. But we're only going to do that if the market allows us to do so and it doesn't act up. All right, those are all the positions for now, and I'll keep you updated with any changes. During the week, we'll be looking at entering some more June positions and possibly a July position. I'll have to look at the calendar. All right, thank you and good night.